Hello and welcome to Livesey Business News. Today I'm joined by some of the team from Oriole Resources. Oriole, listed in London on the AIM market, a market capitalisation of around £4.5 million sterling, a symbol of ORR. I am in fact joined by Tim Livesey, the Chief Executive, and by Bob Smeeton, the company's CFO. Welcome back on the show, gentlemen. Tim, let me come to you first. You've just announced a subscription and sharing agreement with Landsted today. Tell us what you're going to use the money for.
Hi, Tim. Good to be back. Well, primarily, these are for funding for the group's operations. It will allow us to cover costs for the next 2 years, next 24 months.
And why have you chosen to enter into this sharing agreement with Landsted?
Well, the idea of the sharing agreement with Landsted is that for the next 2 years, we have the opportunity to benefit, or Oriole has the opportunity to benefit from any positive share price movement. We've been working towards a number of positive catalysts. We're busy on a number of different fronts, and we expect these to crystallize over the coming months. And these have the potential, obviously, to have a positive impact on share price, making it a very efficient way of raising funds.
Let me just see if I can push you for a little bit more detail there. You've mentioned these positive catalysts. What are the catalysts you see coming in the next few months?
Well, they're a spread. Obviously, we have our key focus areas in Cameroon, our key exploration areas in Cameroon. So we have primarily the drilling coming up on the central license package, the Eastern package. We're expecting funding coming through in Q3 from our North American project level funding partners that have offered to come in. So we'll be doing drill testing on the Bay license targets initially on the CFO. We also then have obviously some potential lithium in 2 licenses in that central license package, and Dom and Gambuku. And we have been in discussion and continue to be in discussion with project level investors looking with interest at how they may get involved in that. Further north in Cameroon, we have the Bibemi license. Obviously, we announced our maiden resource late last year at Bibemi, and we are taking steps to transfer that from exploration into an exploitation license, which not only gives us a bit of security of tenure, but it also takes us steps towards being able to potentially move into some small-scale mining. Again, we've got discussions ongoing with groups that are interested and examining possible opportunities for funding and coming in and supporting that. So Cameroon, has a spread of sort of metals-based targets, and then we have an interesting one on the Wapuzi license in northern Cameroon, which was originally a gold license, but recently we've transferred this over to a limestone license. We announced in the mid-years. And the limestone license, this has potential for possibly cement production. We're looking at local partnerships, obviously continued cash flow coming out of a limestone operation in a royalty form would be very beneficial to our Cameroonian operations. And then obviously we still have Sonala in Senegal. Managem took over the management of that when they bought out IAMGOLD's position earlier this year. And the drilling on that license is scheduled to start in Q4 this year. So we look forward to getting more positive results out of the Sonala license. All the work that's been done there to date has been very good around the Fari targets. So we've got no reason to expect anything but positive results out of that. And then obviously we still have assets. We still have our interest in Murat Dairy in Turkey, which is still heading towards EIA, a few hurdles, and there have been some delays because of the recent elections and stuff that delayed things in Turkey. Things are getting back on track now. So many opportunities, a lot obviously focused on the Cameroon targets, where we believe there is the potential for a new frontier for gold, and also some other commodities, and then value add targets, on our other, what we like to call our legacy assets.
Okay, so quite a few potential catalysts. Let me come to you now, Bob, and let's turn back to Landsted and just let's dig a little bit deeper into some of that fine detail around what you've announced. I mean, are they going to be entitled to invest monthly at a fixed discount to whatever is the prevailing Oriole share price from month to month?
No, that's not right, Tim. The shares are actually being issued immediately, and the proceeds go into this sharing agreement. So the number of shares issued to them is fixed. What varies is the return we get from the amount of money we get over the 24-month period. So easiest way to think about it is that if we were at the base price, the agreements have got a base price of 0.2533p. If we were at that for a month, we would get £73,000 that month. And if the price was 10% less, we'd get 10% less. If it was 10% more, we'd get 10% more. So it just flexes around that base price, effectively.
Yeah, okay, Bob, but as of the close of market yesterday, Oriole was trading below that benchmark price. Is that a concern for you?
Well, obviously, the higher the share price, the better for this deal. But you've got to judge this in the context of the 2-year time horizon. And as Tim talked about, there's a lot of positive catalysts that we can see in the sort of near term. But also, we would all have argued a long time that the share price doesn't reflect the value in the company. So, unlocking that, even just unlocking that, should get us above the base price, we believe. And I think one of the key factors in why that market value isn't reflected is this drag we've had caused by continued speculation about placings to the retail market, which we see that speculation all the time, and it pulls the share price down. This deal alone should remove any of that speculation. So we would hope, naturally we'll see progression in the share price from here.
Can Landsted actually benefit, though, by the share price being lower than the benchmark price rather than going higher?
No. Landsted make more money the higher the share price is. They've got no incentive at all for the share price to decline. So they very much see themselves as aligned with long-term shareholders. They do well when Oriole does well, and Oriole will receive more money should the share price do well, which means everybody benefits from it. All the shareholders benefit. We've been very good at spending the money we've had on the geological exploration. There's been, a continuous stream of successful results coming out of Cameroon. So the more money we have to spend on that, the better for everybody.
Okay. Final question, Bob. Is Landsted able to trade its Oriole shares? Yes.
Like any shareholder, they can buy in and they can sell out. Landsted, obviously, they're a significant shareholder. There'll be a material shareholder on our register. So when they do start, if they did sell down a little bit, they would have to announce it. Every 1% they have to announce. So people will see that process if they do that. But the important thing to remember is that for 2 years, they've got an uncapped exposure to the Oriole share price. And the way they hedge against that uncapped exposure is to hold shares, basically. So, they can trade, but they're likely to be on the shareholder register for quite some time.
Well, gentlemen, thanks for joining us today. That was Tim Livesey and Bob Smeeton of Oriole Resources, updating us on the recent announcement of the subscription and sharing agreement which Oriole have just entered into with Landsted. That's it for this edition of Blythe Business News. Thanks for watching.